Welcome to the Crypto Daily News. This podcast is created by Generative AI. Today is July 23rd, 2024, and we've got a lot of exciting updates for you in the world of cryptocurrency, blockchain, and Web3. Links to all stories can be found in the episode notes. The US Securities and Exchange Commission has officially approved the trading of spot Ethereum ETFs, starting today. This is a monumental step, as it becomes only the second cryptocurrency-based ETF available in the United States, following Bitcoin ETFs launched earlier this year. The approval process for Ethereum ETFs has been a long journey, beginning with applications in May, but the SEC has finally given the green light. These ETFs will primarily trade on the CBOE exchange, with other exchanges expected to follow. The timing of this approval is notable, coinciding with a major Bitcoin conference, underscoring Ethereum's rising significance in the crypto market. Analysts are optimistic that Ethereum ETFs could mirror the success of Bitcoin ETFs, which saw Bitcoin reach an all-time high shortly after their debut. This approval opens a new investment avenue for Ethereum enthusiasts and sets the stage for more cryptocurrency ETFs, including those for Solana and XRP, in the near future. Coin98 Analytics has released its Q2 2024 Bitcoin Layer 2 report, shedding light on unique addresses, transactions, and total value locked (TVL) across various chains. Core leads with 19.2 million unique addresses, followed by BounceBit and Merlin. Core, BounceBit, and B Squared also top the charts in average daily transactions, with B Squared hitting 595,000 transactions per day. Significant growth in TVL was observed for Core, Merlin, and BEBM, each experiencing a six-fold increase. The report also highlights the creation of new unique addresses, with Core averaging 40,000 new addresses daily, and BounceBit seeing a spike of 509,000 new addresses in a single day. B Squared, Core, and Bob were the top performers in total transactions. Financial flow analysis showed Rootstock with a net inflow of $4.4 million, while B Squared faced a net outflow of $4.8 million. The report also delves into the NFT market on Bitcoin, noting a total sales volume of $1.016 billion, with 235,000 unique sellers and 246,000 unique buyers. The upcoming report promises to explore the evolving landscape of Bitcoin Layer 2 and sidechains further. The 2024 Binance Research Report has highlighted several key trends in the cryptocurrency market. Bitcoin's dominance is on the rise, indicating a more selective market for altcoins, with specific inflows into Bitcoin. Runes have outperformed BRC20 tokens, accounting for 60% of all Bitcoin transactions since their launch and generating $145 million in fees. BlackRock is emerging as a leader in the ETF space, while Grayscale remains significant despite tax-related challenges. The demand for base block space remains high, leading to profitability for base sequencers. Solana has seen a surge in decentralized exchange volume, particularly in meme coin trading, which is expected to continue growing. However, Cosmos is struggling to gain traction, and ZK rollups have not yet captured significant Layer 2 activity. The report also discusses the success of the base sequencer and the unique ecosystem developed by Blast, which has attracted total value locked. In DeFi, the report questions the longevity of successful applications that originated on Layer 2, noting that most prominent DeFi projects were built on Ethereum first. Tether continues to dominate the stablecoin market, while NFT volumes have declined, with Blur outperforming OpenSea. Lastly, the report mentions substantial investment in crypto gaming, which has yet to yield significant results. Polymarket, a decentralized prediction market operating on the Ethereum and Polygon blockchains, has gained significant attention during the 2024 US presidential election. Users can bet on various event outcomes, including elections, and the platform uses automated market makers to provide liquidity. The pricing mechanism reflects the perceived probability of an event occurring, with shares priced between $0 and $1 based on their likelihood of winning. Decentralized prediction markets like Polymarket allow broader participation in market creation and liquidity provision, offering greater privacy and lower fees due to the absence of intermediaries. However, they face regulatory challenges, as evidenced by a $1.4 million fine imposed on Polymarket by the CFTC for operating without proper registration. Despite these hurdles, the platform has seen increased user engagement, particularly during significant events, with substantial amounts wagered on outcomes like the 2024 presidential election. Polymarket's growth is reflected in its collaboration with polling expert Nate Silver, who joined as an advisor, indicating its rising prominence in the news cycle. However, the platform's predictions are not infallible, as demonstrated by incorrect forecasts during recent events. Users are cautioned about the risks involved, as engaging in these markets can be akin to gambling. The upcoming Pectra megafork is set to introduce significant upgrades to Ethereum, aiming to enhance its efficiency and user experience. Key changes include the EVM object format, which will optimize gas costs, eliminate common developer errors, and improve just-in-time compilation. The PeerDAS upgrade will enhance data availability and further reduce gas fees for Layer 2 solutions. Additionally, the introduction of the BLS 12381 curve precompile will streamline signature processes, making them shorter and less complex, which is beneficial for both developers and the consensus layer. The upgrade will also implement historical block hashes in the state, promoting statelessness and improving the security of light clients. Validator deposit tracking will shift to the execution layer, significantly reducing the deposit delay from approximately 12 hours to just 13 minutes. Furthermore, smart contracts will gain the ability to force withdraw funds from validators, enhancing the resilience of decentralized staking protocols. The maximum effective balance for validators will increase from 32 ETH to 2,048 ETH, allowing larger validator companies to consolidate their stakes, which will ease network load. The committee index will be moved outside of attestations, simplifying the consensus process for ZK-like clients. Lastly, the upgrade will enable existing wallets to perform functions typically reserved for smart contracts, such as sending batch transactions and creating subkeys, while remaining compatible with future account abstraction proposals. Overall, these changes are designed to make Ethereum simpler, faster, and more efficient. That's all for today's episode of the Crypto Daily News. We hope you found these updates insightful and informative. Don't forget to check the episode notes for links to all the stories we covered. Join us again tomorrow for more news and analysis from the world of cryptocurrency, blockchain, and Web3. Stay tuned and stay crypto savvy.